Hello, this is Jordan. This video is being recorded for Monday, February 27th, 2023. Thank you so much for joining me. In this video, I'm going to discuss the weekly outlook for gold, silver, and the miners. And so I did this video last week, and I was reasonably confident that the sector was really oversold. We were going to see a bounce. And of course, that proved to be off the mark. That did not happen. Precious metals continued their decline last week. They continue to be, I'd say, extremely oversold in a short-term sense, in a very short-term sense. Not necessarily in a medium or intermediate-term sense. So it's important to make that distinction. If we look here at the daily candles for gold and silver, well, first, if we look at the bottom, we can see. Note the gold-silver ratio, that's up to nearly 87. That's in a clear short-term uptrend. But so looking at gold and silver, look at those candles. Silver, pretty nasty candle on Friday. I mean, gold, same thing happened. Looking at gold, 1817. Now it looks like we're probably going to see gold come down to, say, around 1780. You have the 200-day moving average there. You also have a lateral support there. And at the same time, we know that there's a confluence of a lot of support right around 1800. So look for gold to test 1800. It could go a little bit lower. But given that the market's really oversold, if we see gold come down to 1780 to 1800 very quickly in the next couple days, that to me would set up for a potential reversal in a short-term low. Now, looking at silver, of course, gold is declining a lot less than silver. That's what we can say. I mean, I just said it. The gold-silver ratio is trending higher. So silver is performing worse. That's the phrase I was looking for. So silver is holding it closed below the 200-day on Friday by a couple cents. The 200 days at 21. And remember last week we mentioned the slope of the moving averages is important. And so the fact that this moving average is declining, it's going to be less powerful from the perspective of, us hoping for this rebound. But so looking at the support for silver, so if we see gold coming down to 1800 or 1780, that's 1 or 2% downside. So, maybe for silver, silver could decline 3 or 4%. I'm looking at the chart there. $20 looks like a potential support level. That's about 4+% lower. Ultimately, I think the real question when we're looking further out over the months ahead is going to be, does silver come down and make this really significant double bottom, around the high 17s or $18? There's real significant support at 18, going back many years. And of course, we go to last summer and the fall, silver did carve out a bottom there and it did lead gold higher. And of course it led, it peaked before gold did, as you can see on this chart. But I'm, as usual, I'm getting away from the very short term here. But so just to summarize, look for gold to test 1800, maybe 1780. And, in that context, if we see a low there, then maybe gold is able to, well, I would think it's able to rally back to 1835, 1840 at a minimum. But looking at the daily candles, 1850, that's going to be stiff resistance on the way back up. For silver, if it comes down to 20, looking at the daily candles, 22 looks like a resistance level if silver starts to rebound. So looking at the miners, you can see the thumbnails there on the right. Looking at GDX, so GDX declined below the 200-day. Again, we noted last week, it was holding above it, but declining or sloping downward moving average, not that significant, at least if you're looking for a bullish perspective. So looking at GDX, it traded, nearly down to, I want to say 2660, 2670 in that area. I do see good support in the 25s. So, if we see, and same thing for GDXJ. If we're looking at GDXJ, closed right at 33, traded, traded in the 32s, right around 32.50. It looks like that was the low of the day. So if we're looking at the support, probably around 32, and then even you get to 31, there's some good support there. So we're looking at the miners. We could see a little bit more downside there. That aligns with our view that gold could test 1800, maybe even 1780, 1790. So those are potential. I mean, if we see those things happen in the next couple days, that to me can set up. I mean, if you're a trader out there, that's you could look at playing the oversold rebound. Another thing is if looking at the Huey Gold Bugs Index, it's a different index. It's down, I think, 11 or 12 days in a row. Sentiment Trader had a post in their subscriber section. Miners do tend to rally when they've declined 10 days in a row. They rally over the next month or so. So there's that to consider. Also, if we're looking at the breadth indicators that I like to look at, percentage of stocks above the 20, 50, and 200 day. The percentage of stocks in the Huey and GDXJ above the 20 and 50 day, I mean, it's close to zero. It's in single digits for both of those. So there's also that. So there's a lot of evidence here that we could be setting up for a rebound. I don't think it's going to be a huge rebound, but we're probably at least going to see a decent rebound for a week or two, and that's probably, my guess would be, maybe that begins by the end of this week. Lastly, looking at SILJ, that fell below the $10 level. There was support there. Next support is, call it 880 maybe. So that's, let's see, 932. So it's about 4% or so. So there you go. That's the call for this week. I think we see some more selling, but again, if we see more selling in the complex, it could set up that rebound that I definitely called too early just a week ago. All right, that's all for this video. Thank you for tuning in. Talk to you guys again in the next video.